Hello everybody. In this video we are going to be talking about a very important subject I feel like a lot of traders really are not aware of or may not be practicing if they are aware of it, and that is about position size and why it really matters. So before you get disappointed, we are talking about stocks in this video and why scalability and the size of your position really matters. So I used to be unaware of what it meant to scale in your entry, and because of this I suffered very real losses and paid the price on some very real lessons. But as soon as I learned how I could scale in my entry, I was able to very quickly start preventing further losses, net my ideal entries, and lower my risk significantly. So when it comes to scaling in your entry, there are 3 rules I trade by, and rule number 1, as I've mentioned several times, incremental entries. Rule number 2 is I don't risk more than 12% of my entire account on one trade, and rule number 3 is I never give in to FOMO. So never let greed dictate where your money is going to go. Never let speculation and hype dictate where your money is going to go. Let your decisions, your plan, and your strategy dictate where your money is going to go. But most importantly, think about risk tolerance and add that as a factor in where your money is going to go. So here are 3 things I don't do. And the first is don't risk what you can't lose. So if you can't afford to live without the money you're trading with the next week or month or at the end of the year, please don't put it on the market and risk losing it, because not every day you're going to win, and wins also aren't guaranteed. So until you start getting to the point where you're really precise with your trading, you're really strategizing what you're doing, and you have a solid plan for your entry and your exit, as well as a plan B should things start going in the wrong direction, you definitely don't want to have money on the market that you're not willing to lose. And secondly, don't ever YOLO trade. Don't take all of your capital and throw it on one stock at one time, expecting you're going to be able to flip your account. A lot of people do this all the time, and they often are posting extremely discouraging P&Ls. And lastly, don't buy your whole position at once. Like I mentioned, buy in increments. Do not buy your position at one time. Wait and be patient. If you ever heard of the term or the phrase, patience is success, or, the stock market is about patience. Patience equals money. Be patient. Buy your position slowly. If it's going to win, that's great. Don't be disappointed if you only got 20% of the position you were hoping to get. It won, right? So you're taking money out of the market and you're putting it into your account. So don't do these 3 things. So whether you're new to this channel or not, let us know what you think about scaling in your trade and ways that it could benefit you or new traders as well, especially if you're already using this in your trading strategy. This is an extremely important technique to consider. And if you're a new trader, we do have other videos like this up. The latest is over short squeezes. And if you liked this video or found it to be any sort of use, give it a thumbs up. It really helps us a lot. And if you want to see more videos just like this, subscribe to our channel for more.